Our guest today is Jerry Taylor. Jerry, thanks for being with us on Stock Shotz.
Thanks for having me.
Jerry, all the rage right now is whether or not speculation is driving oil. We've even heard reports as late as last night that some of the pundits think that if it were not for speculation, oil would be at $60 a barrel. Is this a supply-demand story, or is this a speculation story?
I think it's a supply and demand story if the speculation story makes sense, it's got to have some effect on supply or demand, because that's how prices are established, by the interplay of supply and demand. So if speculation has a role, it's got an effect on one of those things. Well, how does speculation have an effect on demand, say? Well, people think if we've got all this money in oil futures, the people are increasing demand for crude oil, and that's driving price. But the reality is virtually no one ever takes delivery of oil in futures market. They're essentially trading scraps of paper that obligate them to take oil at a certain price, and they buy and sell that paper, and there is an infinite supply of it. So the futures market isn't affecting the demand for oil, the demand for oil. Is it affecting the supply for oil? Well, it could theoretically, if the futures price got so high that market actors had an incentive to buy oil on spot markets and then put it into inventory and sell forward into futures markets, then yeah, that could reduce the supply of oil in the market and thus drive price. But if you look at the inventory data, you find that oil inventories are liquidating. They're not being built up. They're at below historic norms. So at the end of the day, it's very hard to see how exactly this futures market has any impact on spot markets. They're entirely two separate markets. Once oil is produced in the world economy, there's really only two things you can do with it. You can send it to a refinery where they can turn it into a usable distilled fuel, or you can put it in inventory. You can't drink it, you can't dance with it, you can't make clothes with it. And because of that, I don't have any good reason to believe this speculation is driving price story, because there's absolutely no evidence that there's inventory buildup, and you have to see inventory buildup for any of those narratives to make sense.
Well, we've had guests on the show like Mr. Jim Rogers, who boils it down to look at the increase in demand that China and India alone have added to the market over the past couple of years, and then he turns around and says there has not been a significant oil find in many, many years. So he also makes the argument that this is definitely a supply-demand story. Tell us what can be done. Obviously, we've heard a lot of talk about potentially drilling in Anwar. Then you hear the argument that it would take years to get that online. So what do you think are the best solutions right now?
Leaving the market alone, because price signals are going to induce a conservation, which they're currently doing now. You constantly see in the newspapers now stories about the plummeting demand for SUVs and other fuel-inefficient cars, and the surge in demand for fuel-efficient cars. You're seeing a reduction in housing values for residences which are far from work centers. So you're seeing a change in living patterns to accommodate these higher energy prices. So prices alone are doing more to achieve conservation than anything that Congress could do. And then on the supply side, it's the high price that is incentivizing new development, new exploration, R&D into alternative energy, and new supply. Now, it takes time, because as a lot of people have argued, they're correct. It's going to take at least a decade for substantial amounts of new oil in the Gulf of Mexico or Alaska to ever hit the market, even if you started drilling activities now. So that's not a good argument for not to drill, but it is just a sobering point that there are very, very long lead times in this business. But I think if you leave the price signals alone, you're going to get all the incentives correct, and over time, high prices are going to cut off this price spiral at the niche, just like it's done in 1986 and then in 5 separate boom and bust cycles in the past.
What do you think we should do about drilling in Anwar?
Well, I think you can make a fairly good argument that the oil in Anwar is worth more than the wilderness lands above it. The amount of land the industry needs to extract that oil is only about half the size of the land necessary for Dulles National Airport here where I live in Washington. So the footprint is very small, and there's substantial oil up there according to the U.S. Geological Survey. But to be fair, the critics of drilling there are absolutely correct, and they point out that even 10, 15, 20 years down the road when the field is mature, it's not going to be producing enough oil to have any substantial effect on oil markets. The price of crude oil would probably be no more than maybe 60 or 80 cents a barrel less costly than it would otherwise have been without drilling activity in ANWR. So the left is absolutely correct that its effects would be minimal. I don't think that's a very good argument against drilling, however, because if that were our criteria, that any field has to have a significant effect on market price for us to drill, then we'd drill nowhere outside of Saudi Arabia, and of course the entire market would be very starved. So the right way to think about ANWR is how best to employ this valuable bit of real estate. What's its most valuable use? Well, the oil is worth tens of billions of dollars. Question: is the wilderness on that amount of land, which again is only about half the size of Dulles Airport, is that wilderness worth tens of billions of dollars? Well, I don't think so. Now, of course, we couldn't settle the matter unless we were to actually put that land into the market and allow people to auction off for it, and then we'd really know what people were willing to pay, and we'd actually have something concrete to go on. But until that day occurs, if I were a legislator, I'd vote to drill. But I would do so without great overpromise, and I think a lot of Republicans are overpromising about that field.
We've also heard a lot of buzz about the oil that's in the shale in Colorado. Could you give us a little bit of idea what it would take to get that shale out of the ground and what the current restrictions on drilling are?
Yeah, the shale is actually less in the ground than it's in the rock. It's wrapped up in shale rock. And the amount of economically recoverable oil in that shale in the Rocky Mountain West is about 3 times greater than the amount of oil that the Saudis have as proved reserves in their fields. So there is a huge amount of oil in the Rocky Mountain West wrapped up in the shale rock. The reason we haven't exploited it up to this point is twofold. Reason number one, probably the most important reason, is that it's very, very costly to get that oil. You've basically got to somehow bake that oil out of the rock, and you've got to dig up a lot of rock, which means almost a lot of strip mining for shale rock. And the costs associated with extracting oil out of shale are probably somewhere around $95 to $100 a barrel, given current technology. Now, that may not always be so high, but it's been so high that up to this point, investors haven't been all that interested in going after shale. Just very expensive. But if world crude oil prices are going to be floating around $135, $100, or $140 a barrel over the long haul, then all of a sudden shale becomes economically profitable. Now, of course, market actors aren't going to invest in shale unless they think they're going to get $100 or more for a barrel of oil over the entire lifespan of their investment, which is about 40 years. So just because prices are high now doesn't mean investors think prices are going to be high 5 or 10 years from now. But it's beginning to look like it may be a good investment. But the second problem here, besides the cost, is the federal government. That shale rock is on federal land, and the federal government does not allow extraction. And that's going to be the case unless Congress acts and allows the industry onto those lands, and so far they haven't done that. So both cost and Congress are a barrier right now.
For the rest of this great interview, visit our website, www.stockshotz.tv. That's www.stockshotz.tv. Thank you for listening.